Good morning. Good morning to each of you. Thanks for being here this morning, and welcome to the Northrim Bank AGC Construction Spending Forecast Breakfast. There's a mouthful. My name is Len Morris. I'm Senior Vice President with Northrim Bank and a Commercial Banking Manager. And it's my pleasure to welcome you this morning along with your co-hosts, John McKinnon and Scott Goldsmith. I'd like to take just a minute to recognize other members of our senior management team that are here with us this morning from Northrim. First of all, Mr. Steve Hartung, our Executive Vice President and Chief Credit Officer. Catherine Claxton, Senior Vice President of Commercial Real Estate. Tara Tetzlaff, who is the Senior Vice President of Construction Lending. I'm also pleased to introduce Mr. Dan Lowell, who is our Senior Vice President, Division Manager for Northrim Funding Services from our Bellevue office. We also have several other bank officers and staff here, and I'd like them to stand and acknowledge and recognize at this time. Northrim Bank's mission is to be Alaska's most trusted financial institution. We're committed to adding value to our customers and to our communities. And it's so nice to see so many of you who are customers here this morning, and we thank you for your business. And for those of you who may not be customers yet, you've seen all these bankers around here. They are interested in aligning themselves with you and your business and working with you towards our future. Now, this is the 10th edition of the Construction Spending Forecast, and it's actually the 4th time that Northrim's had the privilege of sponsoring with AGC in an effort to bring important information about the year ahead to you about commercial construction. Northrim's been proud to fund these valuable studies produced by ICER, which is an organization which Northrim has contributed over $1 million to over the years for programs in research supporting economic development here in Alaska. Scott Goldsmith has always been an invaluable colleague whose unique review is always on target. And I don't want to steal from Scott and John's thunder, but I think you're going to be pleased with the healthy increase in spending that we see here coming in Alaska, especially considering what has happened in our sister states in the lower 48. I invite you to enjoy this morning's presentation, and at the conclusion, please remember to pick up your copy of the Construction Spending Forecast on your way out. I also want to remind you that Northrim Bank is also sponsoring our annual economic luncheon coming up April 4th, and we'll be giving a full presentation on the overall Alaska economy and tackling the issues surrounding oil tax reform. Our own bank economist, Mark Edwards, who's here with us this morning, will be presenting there as well. Now, it is truly my privilege to introduce a longtime friend and the Executive Director of the Associated Generated Contractors, Mr. John McKinnon. And he's going to kick off today's program. John?
Thank you, Len. I need these. Welcome all of you, and thank you for coming this morning. And like all contractors or people in the construction business, 7 o'clock in the morning is not early. The Associated General Contractors, as most of you know, is a construction trade association with about 660 members, half contractors, half associate members who are directly involved in the construction industry. We've sponsored and we put together this forecast. This is our 10th forecast. First one was 2004. And it's primarily put together by a part of AGC called the Construction Industry Progress Fund, or the CIPF. The CIPF is an organization committed to advancing the interests of the building and the construction industry in Alaska. The membership of the fund consists of a number of interested parties, mostly contractors, who both union and merit shop contractors, who contribute 10 cents an hour to the fund, 10 cents an hour for every employee that works to the fund. And the fund is managed by a balanced board of both contractors, business side of things, and the labor side of things. And the effort of the CIPF is to advance the interests of the building and construction industry in Alaska. And part of that effort to inform the public of the positive contribution is for the last 10 years we've done this forecast. You might have seen last week, last Wednesday, there was a program on KTUU about energy in Alaska, a 1-hour program. And CIPF got the opportunity to be the sponsor of that If you haven't watched it, access to it will be on our website. You can click on that, go to YouTube, and watch the 1-hour program. An excellent program on energy. And frankly, energy is probably the most critical thing facing us in Alaska today. And energy directly relates to dollars into the state, which directly relates to work in the construction industry. I want to remind you again, if you get an opportunity to go watch that and have it, please do. That was sponsored, another one of the opportunities and sponsorships of CIPF. As I said, this is the 10th year we've done the forecast. This is the 4th year that Northrim Bank has underwritten the forecast on behalf of CIPF. They took the opportunity to do that 4 years ago, and it has been a great partnership. This is the 4th breakfast we've had to unveil, to bring out the forecast. And one thing that makes this breakfast popular is that, you know, it's a free breakfast. You don't have to pay to get the forecast. So you're getting fed and hopefully getting some good news today. And as part of Northrim's underwriting of this forecast, they were very insistent that objectivity and quality be maintained. So they stay completely out of it, and we stay out of it, and leave it up to the folks, the professionals at the Institute of Social and Economic Research, or ICER, to do the research and do the writing. What we get to do is pick the great photos that go into print again. You know, another great cover on this one, and I'd like to thank STG, Jim St. George Clinton, for posing for that great shot. I believe in Constantine for the wind farm. That's a 75-meter tall tower, by the way, about as tall as a football field is long. But onto the program, Scott Goldsmith, who is the most of the presentation today, who does the research and the writing on this, is someone that needs no introduction, but I'm going to introduce him anyway. He was recently retired as a professor of economics at the University of Alaska, Anchorage, and now holds the title of Professor Emeritus, sort of like the Pope is going to be holding Pope Emeritus. He's got a BA in economics from Princeton and a master's and a PhD from the University of Wisconsin. Scott's primary research interests are regional economic analysis, Alaska physical analysis, energy, and natural resources. So please give a hand to Scott Goldsmith, and we'll start the presentation.
Thanks, John, and good morning, everyone. Thanks for coming out at this early hour. We got a lot of material to cover, so I'll get right into it. If I can work this doohickey. Where do I aim? Got it. Just press where it says advance. The main message today is that construction spending is going to be up this year, about 8%, to, for the first time, over $8 billion. $8 billion. It's a number that's hard to contemplate because that's more than $10,000 per person for the entire state of Alaska. And let me tell you, trying to track down all of those dollars is an incredible job. We do the best that we can, but I know that we missed some of those dollars along the way. But for me, it's an amazing educational experience because it gives me an opportunity and the staff at ICER an opportunity to really get into and try to understand what's going on throughout the state in so many of our different communities and all the various ways that the construction industry contributes to the economy. So it's a great project, and $8 billion is a real challenge to try to find all that money. And the increase will be spread among the three main categories of construction spending that we break out. That is public spending, private spending, not including oil and gas, and the oil and gas industry. Okay, we throw the net wide in the sense of trying to capture construction activity wherever it occurs. So we're not just looking at the commercial sector throughout the state, you know, the construction of office buildings and retail space. That's just a very small part of the total pie. We throw the net very wide and try to capture everything. So public spending about a third of the total pie. It's going to be up. You can see the numbers. I won't read them. And that follows a trend of over the last 10 years.
Yeah, I like to throw this 10-year trend in there. To look at 1 year as a snapshot, which what our forecast does with either an up or down year for that very sector. It shows you one thing, but I like to see what it's been doing over time. This 10-year trend shows that in the blue at the bottom, spending has been fairly flat, fairly level in the public sector. And that's not a bad thing. And on the private sector, you see an uptick starting a couple of years ago, largely due to oil and gas interests. I'm going to say this a couple of times during the presentation, but that blue line on the bottom, for the last couple of years, in 2008, when the rest of the country went down the toilet, Alaska kept our spending at a fairly good clip. We kept a nice level pace of the economy, in large part, and I compliment her every chance I can, and it's not just sucking up, to the legislature putting out healthy capital budgets. And I can't reinforce that enough by saying that the money that they put into the capital budget has contributed a lot to the health of the construction economy in the state.
The only thing that I can really forecast with certainty about a forecast is that it will be wrong. And this year, there's particularly a lot of uncertainty about how the construction industry would do. I think, generally speaking, the forecast is going to be pretty accurate, but there are a number of uncertainties that we have to recognize. And here's my little list. When I put the finishing touches on this PowerPoint last night and sent it off to John, I opened the newspaper, and what did I see but the news that Shell was not going to be drilling this year. Well, that was in our forecast. So we're going to have to make some adjustments as we go along. But that happens every year, and I think that one of the, if not the biggest uncertainty, is what the oil industry will be doing this year. There are a number of factors that over the course of the year, and this is true every year, result in changes in plans, either on the upside or the downside. Well, let me move and get past quickly the little bit of bad news that's in the forecast here, this year, and that's on the side of national defense. For a number of years, national defense spending in Alaska was a high flyer. And if we look at a chart of history of military spending in the state, we can see that over the last 10 years, it's been on a very significant upward trend, and then has plateaued at a much higher level than was the case back before 2000. Well, what's happened this year is that national defense has taken a big hit, and you may have seen the news or may have attended a presentation by the Corps of Engineers explaining that national defense spending this year is going to be down about half of what it was last year. Last year was in the neighborhood of $500 million. This year it's going to be closer to $250 million, actually maybe $209 million. And the hit is in one particular area of defense spending that we call Mouhcine, and that's military construction, primarily on the bases, the Army bases and Air Force bases. And that had been running over $200 million a year for quite a few years. And this year it's just been savaged. It's down to $33 million. They're going to be doing very little construction work on the bases. But the other components of national defense spending through the Corps of Engineers is holding up well and is pretty much consistent with past years. And that's civilian programs associated with things like dredging the Port of Anchorage, environmental work, which has been growing in recent years and is now $100 million. And That's both cleanup of associated with environmental concerns on old sites as well as on current sites, current bases. And then a couple of other smaller categories of spending, like the Missile Defense Agency, which began in the earlier part of this millennium, was much higher than it is today. Let me talk for a little bit about the sources of public spending, where the cash comes from. And let's talk first about the federal civilian side. And again, another graph that looks somewhat similar to spending by the military in Alaska over the last 20 or 30 years. This is civilian spending by the federal government in Alaska. And it's federal grants, which is the biggest category. It includes both operating and capital grants. So capital grants is a big part of this, but it's not the entire picture. And again, what you see is a big run-up starting in the late 1990s, surprise, surprise, wink, wink. I don't have to tell you why that, one of the reasons for that. But then you see that it plateaus and it starts to taper off. In 2009, 10, and 11, we were very fortunate. You see those black at the top of the last two bars. That's ERA spending. Alaska got a lot of money as a result of the federal dollars that were pumped into state and local governments for economic recovery. We did very well with that, but the major pattern of this is a big run-up in the last decade and plateauing more recently. Well, in terms of the biggest federal capital grant programs that come to the state, and there are 4 of them. They fund highways, airports, safe water, and housing, in particular rural housing, primarily aimed at Native communities. The funding is held up pretty well, in spite of that graph that I showed you, in spite of the general squeeze at the federal level. The only one of those 4 programs that has really weakened over the past decade is the Village Safe Water Program. And that you really can't see the detail on this, but the main trend in the bars as we move over time is for them to get a little bit smaller. So this program, which is funded from a variety of sources, and that's why the bars have different colors as you move up the bars. Has been under some, I wouldn't say attack, but funding for this program, it has been declining slowly over the last 10-year period. When we turn to state government spending of capital construction, the pattern is somewhat different. Here's a graph that shows State General Fund petroleum revenues over the last 10, 20, 30, 40, 50 years since Alaska became a state. And if you add up, this is incredible, if you add up all of these revenues and you throw in the revenues to the permanent fund, put them in today's dollars, the total amount of money that the state has received from the petroleum industry in terms of revenue, taxes and royalties, $178 billion. Of that $178 billion, more than $50 billion of it has been received in the last 5 years. We've been extremely lucky and fortunate to be able to take advantage of the run-up of oil prices and the change in tax policy over the last 10 years in terms of increased state capacity to fund whatever the legislature decides to fund in a given year.
Yeah, I wanted to throw this slide in just to make you aware of something you're probably already aware of, and I put this together last spring and got on the Trans-Alaska Pipeline's website, looked at their annual oil flow through the pipe, their throughput, looked at their daily throughput, and plotted this as a series of dots And then, because I'm not technologically able to do that, I gave it to my receptionist. I said, Mandy, can you do a regression line on this so we can see what the trend is? And this really is kind of it's an eye-opener, and it should be an eye-opener for everyone. You know, when that line is trending down the way it is, it means we're pumping less oil through the pipeline. And as you've heard many times, that oil revenue is funding somewhere between 85 and 90% of the general fund funding for the state. That's what pays for the capital budget, the operating budget. We're more concerned on the capital budget side. But that's what pays for a lot of construction projects that are out there. And we've got to reverse that line. At the worst case, we've got to flatten that out so we don't continue on down. But that's something that the legislature is working on right now. Scott mentioned the oil tax bill that went in place 2007. You saw the revenue on the previous graph. You know, what we've gotten in the last 5 years in oil revenue has been great. You know, it's really been a boost to our industry. But you know, it's spending. It's too fast of a burn rate from my perception. We need to take that revenue and spread it out over the next, you know, generation or generations at least. Now that's the impetus behind oil tax revisions that the legislature is going through, and you know, they're making some progress. The work that I'm seeing going on down there is a faster pace and a more concerted pace than I've seen happen in the legislature since 2004.
The state gets its funding for the capital budget from 4 main sources, and I've shown those on this graph. The solid line represents federal dollars, mostly those grants that I mentioned already. And you can see that's been running in the neighborhood of roughly $1 billion over the last decade. And there's really no trend upward or downward with that unless you are pessimist and you see a little bit of a negative trend there. But it's been pretty flat. The other 3 sources are the general fund, which is the red, restricted funds, which is blue, and the green is the general obligation funds. And the most outstanding feature of this graph is the fact that in the last 3 years in particular, local sources of funding for the capital budget, that is the general fund, GO bonds, and other funds, has outstripped the federal contribution. And most of that has come from general fund spending. So we're taking some of those $50 billion of revenues and we're pumping them into the capital budget. You can see that in the last 2 years, the capital budget has gone from $1.5 billion in local sources to $2.5 billion in local sources. If you add in the federal government, it's $3.5 billion last year.
Yeah, and I'd like to point out the importance of those green bars there. There's only 4 of them that have happened in the last 10 years. You know, in 2003, there was a $315 million transportation bond issue. It consisted of GO bonds and Guettabi bonds. First bond issues that have been issued in the state since the early 80s. When oil revenue started flowing, the state stopped bonding for things, and it was like, we can spend the revenue, we don't need to bond. Well, in 2003, they realized that, you know, we need to start bonding to, not because they needed it so much, but they needed to exercise that part of state government, the ability to sell bonds and use that kind of revenue and carry some debt, because debt actually looks good on the books, a certain amount of debt. We had bonds again in 2008. There was about a $400 million bond issue for transportation projects. 2010, there was all facilities in 2010 put under the umbrella of education bonds, and that's where we've got the Seawolves Arena. We've got a couple of schools were built out of that, and the 2 engineering buildings were partially funded through that. And what's interesting when you look at that is those bond issues that we've had, the last 3, I'm not speaking for the one in 2002, most of the projects that were listed on the bond issue were not fully funded in the bond issue. It was enough to get the project started, but what you know, I kind of feel that disingenuous on the part of the legislators to put out a bond issue of only partially funded projects. But, you know, I've come around the other side of that going, you know what, I see some value in doing that because it's a commitment on their part to say, if the voters approve the projects, we will commit to funding the rest of it. And the bond issue that passed in November, another case, we're about $270 million short on $254 million worth of projects. So the bond issue fund furnished about half. The next few years, regardless of what the revenue picture of the state is, the legislature is going to have to honor that commitment to fully fund those projects. So I'll talk a little bit later about the capital budget the legislature has proposed, the governor's proposed, and you know, it may appear lean on the outside, but I'm fairly confident it's going to fill up and fill out with good capital projects before the legislature turns in April.
Just to avoid confusion, John thinks in terms of calendar years, I think in terms of fiscal years. So that last green bar there is the fiscal year 2013.
Which was November 6, 2012.
Exactly. Okay, so what's in the fiscal year 2013 capital budget, or what departments is it in? Well, we can see that it's primarily or overwhelmingly in the Department of Transportation and Public Utilities, public facilities, and somewhat surprising to me in the Department of Commerce. And why is that? It's because there's a big program in the Department of Commerce that many people are not aware of. It's called the Discretionary Legislative Grant Program. And this is supposed to be whoops, oh dear. It's supposed to be a little movie.
Can you hit enter on?
This is the big excitement of the show.
Yeah.
Well, maybe next year. Anyway, the Discretionary Legislative Grant Program is a program that allows individual legislators to put items in the capital budget. And last year, it amounted to probably $800 million. And there was all sorts of stuff in it. And if you're really interested, you can get the capital budget and you can look at this particular program. It runs to more than 40 pages. 40 pages of programs, large and small, some that are obviously within the purview of what the state government should be doing, but I asked my research associate to pick out a program that she felt didn't really fit in with what the state government should be spending on, and she came up with a $200,000. Now, I hope there's no former Canadians in the audience, but she came up with a grant of $200,000 to upgrade the curling club's facility here in Anchorage. And I love curling just as much as anybody else, but I don't know if that's really something that the state government should be involved in.
And you know, Scott makes a real good point. And when the capital budget passes, I usually send out a link to the capital budget to my members and say, you know, in this area right here in the book, between page 37 and page 92, big chunk of the budget. The budget's 180 pages long usually. These are the discretionary grants to the Department of Commerce, and I just say, you know, for an exercise, look through those grants and ask yourself, why is government funding this? It's a real healthy exercise to do. You know, you can understand why government is funding road projects, okay? But why are they funding a Zamboni for a Lions Club ice rink? And I just picked on that when I was a 4 or 5-year-old grantor. You know, there are a lot of them in there. You need to look at that and ask yourself that question. And it's a difficult position that a lot of legislators are put in, where there's a lot of money. You know, there's a lot of people there with their hand out asking for things, and there are a lot of examples in there of things that just don't fit in with government funding, but we've gotten used to it. And with the outlook in revenue, we're going to have to start getting used to it. We're going to have to tighten our belt a little bit on those discretionaries. The 2014 capital budget, and this is fiscal year, I did your thing right there, it's this calendar year's capital budget. You know, when the governor presented the capital budget on December 15th, it was $1.8 billion, and he said it's going to be lean this year, and that 1.8 was about $1 billion worth of federal funds. But it's going to be lean this year. We don't have the revenue to support a bigger capital budget, but you know, my sense is that things are going to come out differently than that, and it usually does. The legislature takes their prerogatives as they're the appropriators, and they add money to it, they add projects to it, and we have co-chairs of House and Senate Finance, Representative Stoltz in the House, Senator Meyer in the Senate, and both of them like a healthy capital budget. They recognize what capital spending does for the state, and conversations with them, and from what I read that they've said, we're going to see fewer projects funded, but they're going to be larger projects. There's going to have to be a number of those bond issue projects from the last few bond issues that need to be backfilled. Engineering building, whether they'll fund the full $106, $107 million that's needed to complete both of those, building one in Anchorage and Fairbanks, whether that will get full funding or another phase of funding, I can't say, but there will be funding from those. There will be money that goes into the Alaska Gas Line project that ASAP, the Alaska Gas Line Development Corp, has been working on for a couple of years, and believe me, they made remarkable progress on that line in a couple of years. Now, whether that's the line that eventually goes forward or not, I can't predict, but what that is doing is pressuring all of these projects that are interested in getting gas to market and gas to the residents of Alaska moving ahead. Susitna-Watana Dam, the governor's got a $70–80 million in his capital budget proposal to continue to advance that project. That's going to be a $4.5–5 billion hydroelectric project. And, you know, I'm a supporter of that, not just because it's going to be, you know, half a decade, 5–6 years of great construction, but what that does is that provides low-cost energy, electricity for, I mean, the rates that we set when you build the thing pretty much hold true for 100 years. And does that project require money out of the state treasury to build? You listen to the presentation on that thing, and if you've got a market for the energy, and you've got a price for the energy, you've got a revenue stream, and a project like that will sell revenue bonds, and basically the ratepayers will be paying for that over the next 40–50 years. Great project. You know, we will finish the projects we've started. I mentioned the 2012 transportation bonds. Shortfall of $271 million in those bonds. Those are the bonds that you voted on last November. There's a shortfall in those because they funded the project partially, and to fully build the project, it requires a lot more. And in the 2010 education bonds, we're short about $107 billion on those things. So I'm optimistic we'll get a good capital budget. You know, there will be some red pen at the end of it for some of those discretionary projects that the governor, that's his authority, that's his right to veto things. The governor will lighten it up a lot, but you know, in the process of this whole capital budget, there will be some compromises. The legislature will say, Governor, we'll give you this if you give us that, and that's the way that program works.
Okay, let's look quickly at the main categories of spending, and there's more detail in the written report. Highways, it's going to be up. We have the passage of the GEO bonds, which were about half devoted to highways and other transportation, $227 million in that bond program. The federal government passed, finally, legislation authorizing expenditure of federal funds on the federal highways program, at least for a couple more years. We've always been uncertain as to what the feds are going to do with that program, and there will be uncertainty in the coming years, but they have essentially extended the program as it currently exists for a couple of years. So the state has gotten its share consistent with past years from the feds for highways. The Tanana River Bridge construction continues this year, and I believe it will be completed in 2014. The discretionary grant program that I mentioned, the little supposed movie that did There's a lot of money in that for local roads and local government. The Roads to Resources program of the governor is another contributor to strong spending on highways. Airports, ports, and railroads also a good year. Also took advantage of the GEO bonds. $200 million in the GEO bonds for ports throughout the state, not only the Port of Anchorage, which received not only from the GEO bonds but from general fund, $100 million. But we don't think that's going to be spent this year while they figure out what to do to move forward. The Airport Improvement Program, which is the big federal grant, continues at about the same level it has in the past. And the rail extension to Fort McKenzie, as John mentioned, well, maybe he didn't, but has about half the funding that they need to complete their project, but they're going to be moving forward with partial construction this year on that project.
Yeah, on the highways and aviation picture, I think that's one of the bright spots we have. Largely federal funded, except for some of what the legislature does. We'll get continued funding at historical levels or near historical levels. Scott mentioned the highway reauthorization last year and aviation reauthorization. They both came with a couple of components that were called, and they've called it this many times, environmental streamlining, but a reduction in the process that the project developers, the state DOTs, have to go through to get a project into construction. What that translates into is that federal dollar is actually worth more than it was because there's a few hoops they don't have to jump through. Anecdotally, we used to consider when I was at DOT that a federal dollar was worth about 75 cents compared to a state dollar. That's about it. I think we've knocked a nickel off that. So a federal dollar might be worth 80 cents. But getting a project out quicker means that the work gets done faster and it costs less. The Governor's Roads to Resources program, that is actually was started back in Murkowski days, and there's a lot of value to that. And I want to talk about that at some other point, but that's something we need to keep an eye on. And the state-funded transportation program has been an AGC priority for years to develop one of those things like our federally funded program instead of spot and almost a shotgun blast approach of funding these projects. This is an organized, concerted funding with dedicated funds from a state revenue stream, user fees, oil or motor fuel tax, vehicle registration fees going into the construction program. And once again, for the third time in the last 5 years, Representative Peggy Wilson, who's chair of the House Transportation Committee, has advanced 3 bills to try and accomplish this effort. HGR 10, which on Tuesday went through House Transportation Committee and passed out, it would be a constitutional amendment that dedicates funds for a transportation program, and then HB 122 and 123 are the actual vehicles that establish the program. One difference this year is last year she was looking at creating an endowment fund with $1 billion. This year she upped the ante to $2 billion. Do I see this happening this year? We might get the constitutional amendment out of the legislature to go to a vote of the people in 2014. We might. I'm probably holding even odds on that one. Even odds, that's not. It's a work in progress, and every legislative election, we pick up a little more support on the thing, and more people recognize the value of this.
The big story in education this year, and John has already mentioned it, is what's happening at the university. Continued construction of the Seawolf Arena and 2 new engineering buildings, one in Anchorage and one in Fairbanks. Unfortunately, they're not fully funded yet, but we think that the university is going to go ahead with them in spite of that. And hopefully they will be fully funded in this legislative session. The state has also, through the general fund, funded construction of 2 rural schools in Monarch and Kaligna, I think I got that right. A number of local schools will be under construction. this year as well. Valdez, Kodiak, and Borough, and various communities have been floating bonds for smaller education-related projects. In terms of utilities, that surprisingly will also be up this year, because as you drive to the airport, of course, you see the new Chugach Electric generating plant is essentially complete. But as it turns out, Mouhcine Electric Association as well as AML&P are both planning construction of new generating facilities as well, and so those are going to start under construction later this year, and so there will continue to be significant activity in that regard in the greater Anchorage area. Lots of money in the state budget for renewable energy, hydro projects. We saw the picture of the wind towers in Guettabi. State assistance through the renewable energy programs, and also that discretionary grant program. Also in utilities, in addition to electricity, is the telecoms, and with the move of Verizon into the market, the telecoms always spend a lot of money, and this year appears to be no exception. Healthcare is one sector that's going to be down, and it's as though this sector is taking a breath, catching its breath. There have been really 3 big hospitals under construction that are now essentially complete. One at Nome, one in Fairbanks, and one in Barrow, which I'm told is not quite finished, but will be this year. It's essentially done. So 3 really big projects finished, and there aren't any new projects coming along this year. There's continuation of the big $150 million multi-year expansion at Providence, which will continue, and there's talk and hope that a new hospital in Ketchikan will be under construction in the near future, but they're still looking for funding. So it's going to be kind of a pause year for hospitals, but of course we're all getting older, and what that means is that there will continue to be growing demand in that sector, and it will be not only for hospitals but also for senior centers and other facilities for senior citizens and Professor Emerita. So,
yeah, and Scott mentioned down, but this doesn't cause me any concern, because you look at 10 years and it does this a year up, a year down, a year up, a year down. We're all aging, and technology is changing, and there's a lot more that they will invest in healthcare, and like Scott said, senior housing and senior centers. So we have that to look forward to on both the business side and the retirement side of our lives.
The federal government spends money in myriad ways, as I'm certainly sure that you're aware. So we have to clean up the calculations by taking these other ways into account. There are additional funds that come through state government that come from the federal government. I already mentioned the Village Safe Water Program. That's a large source. The largest source in this individual source in this category, however, is the NAHASDA program, and I don't know if I can get it right. It's the Native American Housing Assistance Self-Determination Act. I did it.
That's right.
That's about $100 million a year that comes to Alaska, and it goes not through state government, but goes directly to the native housing authorities. And that, of course, supports construction of housing in rural communities throughout the state, and I believe urban communities as well. In addition to that, there are smaller amounts of direct federal capital assistance to federal agencies like the Post Office and the Park Service and so on and so forth.
You know, the federal equation and all this stuff, you know, there was an earlier slide that had the word sequestration in it, and, you know, that's happening right now, or not happening right now. It is happening. You know, in end of December, we had the fiscal cliff, and we were going to go over the cliff and how bad it was going to be. Well, how did Wall Street respond? You know, it's kicked up. We've got the sequestration going on right now, and that, you know, the president and other people in the administration were talking about everything that would not happen. You know, TSA wouldn't show up for work because they'd be furloughed, and you know, everything would take longer because of all of these furloughs and cutbacks in federal spending. You know, you really dissect that, and it amounts to about 2.5% of the federal budget. And you know, I think anyone can sit there and pull 2.5% out of your own budget, and you know, it might be a hiccup or two, but not really a big deal. Sequestration is a lot of hype, and you know, when they talk about how, you know, there wouldn't be firemen or this or that, there's a thing that's called firemen first, and that's when government, and it's a phrase that's used, and that's when government has to make a cutback. The bureaucrats go, okay, we've got to find the most obvious, the most painful things that will happen, and say that's going to happen so that we don't have to make these cutbacks, so that the politicians can come around and fund us, and that's what you're hearing with sequestration. It's a lot of hype. You know, sequestration, personally, I wish we'd gone off the cliff in January, because I think Congress needs a wake-up call on that. And the next thing that they're going to do is the continuing resolution that has to be done by March 27th. Congress, the Senate, hasn't passed a budget in 4 years. Frankly, I think they ought to be thrown out for not doing that thing. That's their job, is to pass a budget. But they haven't passed one, and so we go from one crisis to another crisis to another crisis. It reminds me of when my daughters were teenagers, you know? I mean, they'd come to me, Dad, we got this, you know, big deal coming up. And it's never a crisis. It is at the moment to them, but, you know, it was just a small little hiccup in life. And, you know, Congress has just got to get on with things and take care of the business, take care of what we elected to do. They need to deal with the $17 trillion national debt, the unfunded liabilities in Social Security and Medicare, regulatory gridlock, which, you know, we all experience the finer parts of that, and just the general dysfunction in Congress. You know, what I've learned about Congress is that failure is an acceptable alternative to them, an acceptable goal. If they don't succeed, yeah, that's okay. We can fail. You know, I don't think any of you run your businesses with that kind of an acceptable alternative. You don't run a business saying, you know, if we fail, it's okay. It isn't okay. You want to succeed. You want to come out ahead on this one. So the federal equation is probably the biggest thing that affects us today.
Turning to the private sector economic driving industries, the smallest in terms of capital construction, usually tourism and seafood. We've only identified one new seafood plant that's going to be going in somewhere in western Alaska. I want to say Act 10. I'm not sure if that's right. Relatively small, but stable spending. Mining is a lot bigger. It's going to be down a little bit this year, but that's not a reflection of an unhealthy sector. Last year, there were significant upgrades at 3 of our large mines, Poco, Fort Knox, and Kensington. And now they've moved on to production phase with those upgrades. There's only one large upgrade that we've identified for this year at Greens Creek. So there's not quite as much going on in that regard. So that's why things are down a little bit this year. But certainly as we look forward, the opportunities in this sector are just mind-boggling.
Next slide. Oh, that's right. You got it.
I'm looking out the window.
Yeah, you know, I refer to mining as a sleeper. We don't see it. You know, I mean, they don't have any 15, 20-story buildings in town that say Core Alaska or Donlin Gold or anything like that on it. I mean, they're a sleeper. It's hidden from view. Most of the mines are out in remote Alaska. They're providing a lot of jobs, but we don't see those. Who does see them are the equipment vendors, NC Machinery, CMI. You know, in the last 4 or 5 years, when there wasn't a lot of equipment being sold in the construction industry, it was being sold in the mining industry, and it's been a big deal for them. You know, there are no new large-scale construction going on this year, likely not next year, but we've got continued exploration, some good prospects on the horizon. Pebble continues on both sides, you know, the positive press that they're trying to put out and the negative press that some of our friends in the environmental world are trying to put out, that the world will come to an end if Pebble is developed. Donlin Gold, Donlin Properties on the Kuskokwim, they're putting a major effort in this year, and you know, I mean, $5, $6, $7 billion development to get that mine built. Tremendous gold reserves, and that's going to provide opportunities out in rural Alaska, like Red Dog did for Western Alaska. You know, Donlin's going to have they're proposing a 330-mile gas line from Cook Inlet to supply the energy to get Donlin, you know, to have it operate. I mean, that's an amazing project, and it's all privately funded. Livengood on the Dalton Highway, another high potential project along the same lines as Fort Knox out of Fairbanks. The new prospects, probably the biggest one is the Volcan Mountain Rare Earth prospect on Prince of Wales Island. You may have read in the last couple of years that China has the lockup on most of the rare earth metals in the world, and rare earths are necessary for a lot of the electronics. I mean, little tiny molecules of real rare minerals that if you don't have them, stuff just doesn't work. Well, Volcan Mountain got a hell of a prospect for rare earth minerals, and that's out of Ketchikan, and that'll be there's no doubt in my mind that that's not going to proceed to be a good project. But mining overall is out of sight, but it's not out of mind because we hear about it so much from the dark side that does not want these projects to happen.
The big guy on the block, of course, is oil and gas construction spending. And we're optimistic this year. Of course, not everything that we projected last year actually came to pass, so, which is typical, I think. So that's one reason why the number is up as much as it is this year. Now, taking into account Shell's announcement yesterday, this needs to be shaved a little bit, but not too much. And why are the numbers up this year? Well, I would argue it's not because of ACES being so successful. I would argue there are a number of other factors that tend to drive up spending over time. One of them, of course, is that the production value of our petroleum continues to be extremely high. This is a graph that shows that the value over time is just the production times the price. And you can see that even though today we're producing about a fourth as much oil as we were back in the early 1980s, the value of that oil is about the same as it was back in the early 1980s. And of course, this is one reason why a lot of people don't recognize that we're on this downward trajectory that John has shown us. So there's a lot of value in the oil that's being produced today, and I would argue that that's one reason why a big company like a BP can say, okay, we're going to harvest what we have now, not necessarily invest in new facilities, but invest today to get as much out of the ground today as we can from the currently known reserves. So I'd argue that that's one reason why expenditures are high. And BP, even though it has said that they're not going to go forward under the existing plan with the Liberty field, they postpone that, they're reevaluating how they're going to try to get that oil out of the ground, and has announced that they're not going ahead with their CHOPS or cold or the heavy water project. I want to say but it's a heavy oil. The development of a heavy oil project, they're not going into that. They're still spending a lot of money up on the North Slope. And it's, I take them at their word, it's harvest mode. Another reason why spending is up is just because the fields are aging and the infrastructure is aging. A lot of it's 35, 40 years old. And we know that under under those severe conditions, it takes a lot of maintenance and upkeep to keep those facilities operating. And this is not a really good measure of that. I don't think we have a good measure of it. But the fact that back in the early 1980s, one oil worker represented 250 barrels of oil produced each day. Now that ratio is down below 50. That is, one oil worker generates on average about less than 50 barrels of oil a day. So it's taking more employees to get the oil out of the ground. And part of that is the higher maintenance costs. There are obviously other things going on as well. Globally, and it's certainly true of Alaska too, the unit costs of oil production have gone up dramatically in the last 10 years. The bars show you an index of costs. Excuse me, not an index of costs, but dollars per cost. This is worldwide data from Cambridge Energy Research Associates. What's interesting about this, two things are interesting. The fact that the costs have gone up so dramatically in the last decade, and the line represents the price of oil. And what you see is the costs have followed the price of oil up over the decade. So the cost of doing anything, and we hear this from the oil industry, the cost of doing anything have increased dramatically over the last decade. So in order to maintain the same level of activity, you have to spend more dollars. And then finally, I do come back to ACES because one of the features of ACES, or more recently, is to include the opportunity for oil companies to receive credits for certain types of new investments. And you can see on this graph that the amount of petroleum tax credits has been growing pretty rapidly over the last 4 or 5 years. And I don't know what it is for 2013, but my guess is it's going to be at least as high as 2012, if not higher. So you can see that this is another source of new dollars coming into this part of the construction.
Actually, leaving that slide up there. Okay. I want to add one thing to this, and right now, as I said earlier, the legislature, both in the House and the Senate, they're looking at the oil taxes revisions to the 2007 ACES bill, and I have to distill things in very simple terms so that I can understand, and I refer to it as writing in crayon. And that ACES did two, among many things, had two major components. It had a lot of credits in there as incentives to explore. Right now, we're paying almost 80% the cost of these companies to go out and explore for oil. And then on the other hand, it has disincentives through its progressivity to get that oil into production. So we're paying them to explore, and we're not paying them, there's no incentive to produce. So what these oil tax bills, the two efforts are, is they're going to dial down the credits, or take those credits and apply them on production. Yeah, there's a credit available if you explore, but you can't take it until you get that oil to market. And they're going to take the progressivity component and either get rid of it or alter it. I know the governor's bill said get rid of it, and he did a couple of little voodoo things in there that restore some of that revenue. What passed the Senate got rid of progressivity, but they bumped the tax rate from $25 or 25% up to 30%, which kind of replaced progressivity but flattened the curve. But it's, they're doing what I consider to be the right things, taking those two major faults with ACES. And this slide, I showed you this one earlier where I did the regression line on throughput on barrels per day of Trans-Alaska Pipeline. I took one step further and I ran that line out to zero. When production goes to zero, if the production trend continues somewhere around 2024, there's no oil to pump through the pipeline. Reality is there will be some additional oil put in, whether it's enough to sustain things. Another aspect of the pipeline is you can't pump 10 barrels a day through it. A pipeline doesn't work when it's half full, unless it's all gravity like a sewer line. A pipeline's like a water line. It's got to be charged full and under pressure and pumped to flow. So that's kind of a real eye-opener to me is you know, when that's going to run out. And at some point we need to, we're behind the curve. We need to replace that oil and flatten that thing out or increase the slope into the positive side, or we're going to be into a heat curve here.
Most of the action in the oil and gas sectors on the North Slope. I show this map not expecting you'll be able to read it, but just to demonstrate that there's a lot of different things going on up on the North Slope, and it's difficult to keep track of everything that's happening. You hear a lot about exploration activities. Most of that is being conducted by the smaller companies up on the slope, the Great Bears, the Link Oils, and so on and so forth. We're certainly happy to see them there, and they're certainly spending money on exploration. The big bucks are still being spent by the majors, not only BP, but in particular this year Conoco, who's going to go ahead with their CD5 satellite, the fourth satellite around the Alpine field. They're going to be actually drilling an exploratory well this year, and they will be continuing to work in the existing fields at Prudhoe and Capar. So they're really going to be the biggest spender this year on the North Slope. Exxon will continue to be working on Point Thompson. They're the other big spender. You don't hear that much about Pioneer and E&I. In fact, you don't hear anything about E&I. I don't know why that is, but it is. They are continuing to develop the fields that came on, most recently came online, the Gourik and the Kayachuk fields, and in particular Pioneer is looking at a large expansion of the, I think it's the Gourik field. But as I say, mostly you hear about what's going on with the smaller companies who are exploring, but most of the dollars are being spent to maintain existing facilities. On a much smaller scale, Cook Inlet, the big news there is that Hillcorp has concluded their purchase of Marathon, so they're going to be the biggest spender. They say we're going to spend $250 million in Cook Inlet on the facilities that we've obtained and exploration. Again, thanks to these credits, a lot of smaller companies, and that's really what you hear most about is these smaller companies and the smaller prospects that they're going after. But again, Cook Inlet activity will be up this year compared to last. Turning quickly to residential commercial, I know we're running out of time. Both of them up a little bit. I think what's representative of that is just looking at Anchorage residential building permits. You can see we came off several huge years in the early 2000s, and then we came way down to be just under 500 the last couple of years. You see in 2012, if you look really closely, a slight uptick there. And there's been a slight tightening both of the residential and commercial markets, both in terms reflected both in terms of vacancy rates and in terms of price. And so there is a little bit of an upward movement. I don't know what people in the real estate business would say. I'm sure they have some fancy terms for this. Moving up a little bit. So it seems to me that there's a little more on the potential on the upside than the downside this year for both residential and commercial. And I think the best news is for the ladies in the audience, I'm told that an outlet mall will be coming to Anchorage this year. Unfortunately, it won't be new construction. It will be redesigns of the Diamond Mall into an outlet mall. So that's something to sort of look forward to. And last but not least, other state and local spending, excluding transportation, education, health, and utilities. As I mentioned already, the designated money for everything that you can imagine. And it's down a little bit this year because I've actually taken some of the stuff that was in this category in former years and moved it into where it really belonged in utilities and healthcare and so on and so forth. It's really hard to follow all of the dollars as they flow through state government. Also in the state capital budget, there's some other buildings. There's the SLAM building. I just saw a mock-up of it at the airport in Juneau on Monday. The SLAM building, State Library Archives Museum. I don't know the details, but it's expensive. It's going to have to include all of those, I guess. The energy rebate program, the weatherization program, that's all in here. Grants for water and sewer upgrades. There's a lot of different categories, and it's not an insignificant amount of money. And that's the end of what I have to say, and I'll turn it over to John for one last look at the future.
You mentioned the state energy rebate program. On the residential side, that has been one of the best investments the state has made in the last decade. The $100 million or so that they pumped into that. Residential rebate program, you do upgrades, the state will give you a grant or reimburse you for those a certain amount of those upgrades, provided you perform to a certain level of improvement. The net effect of that is everyone that has participated in that has resulted in an average 30% reduction in the energy costs for your home. To me, that's an investment by the government. That's a grant, and you know, the reward should be in itself the incentive to make those upgrades to your own house. But the state's participation kicked it off, and everyone that participates has benefited from that. But I'd like to point out that Alaska is in good shape. In spite of that regression line taken down us down to doomsday, the apocalypse in 2024, we got $16 billion in budget reserves. And those aren't constitutional budget reserves so much. Most of that is accessible by a vote of the majority of the legislature, not a 3/4 majority. The permanent fund crossed the $45 billion mark, so we can be assured of getting that check every August that we become entitled to. Note the sarcasm in my voice right there. We have a AAA bond rating. We need to keep bonding projects and exercising that bond rating. We have a pro-growth legislature. We have a pro-growth administration. And that really bodes well for us, and especially in the resource side of the world. And we have abundant natural resources that we just need to tap and monetize. And what can we expect? You know, I'm keeping my eyes on the legislature this year because that's right where the action is in January through April. There will be revisions to petroleum production taxes. Now, whether they get that done by April 19th, or they have to go into a special session to complete it, I'm not going to predict, but they will take care of it. They will address exploration tax credits and apply them to get an incentive out there to produce, and they will take care of progressivity. And there's probably a few other little things in there, some nuances of the bill that I don't understand, but they'll take care of it, and I have a lot of confidence in the people that are looking at it. There will be progress on gas line. There'll be continued. HB4, I believe, is the vehicle that Representative Chenault, Representative Hawker have put forward to continue that operation. There will be progress on Susitna-Watana Dam. I wish they picked one of the two names of that. It's either the Susitna Dam or the Watana, and they will be holding the operating budget in check. We have two budgets in the state. Unlike the federal government, they pass one budget with everything. We have an operating budget that funds the operations of government, and we have a capital budget that is for capital expenditures with some goofy things in there, like grants to various organizations we talked about earlier. You know, the amount of effort that the finance subcommittees are working on various state agencies is they're looking this year, and I'm fairly confident they'll succeed. The governor proposed a 3% increase in the operating budget, although it's more like a 6% increase because some operating things were shifted to capital appropriations. But right now, these subcommittees, which they expect to close out this week, early next week, they're going to hold the line to what last year was. And I'm very confident they are, and I hear things of people in the state agencies going, what are we going to do if they cut this? You know, 3%, you can live with that. Sequestration, that 2.5%, you know, a budget, multi-million-dollar budget, you can find that kind of room in there to hold it. but I'm very confident they're going to hold the line, and that's where the outrageous growth in government has been.
So I just did the calculation in my head. An $8.4 billion level of spending translates into about $20 million a day. So I think we all better get out there and get to work. Thank you very much.
Thank you. And I want to say thank you again for coming to breakfast this morning to hear the forecast, and Dory, Scott, and I. We try and liven it up a little bit, but we can both be kind of dry when we're talking about these things. Be sure to pick up your forecast. There's as many as you need on the way out. I don't know how many we have out there, but if you need more, come by the office and we'll get you more. They're good to have around, good to mail back to your parent companies if you have parent companies, your bonding agents, your banks, and everything. So thank you for coming.